Hello guys, welcome to the channel. Another day, another trade. Today I'll be taking you guys on a trade which was taken on EURUSD, and this trade was taken on the 5 minute time frame. Analysis started from the monthly time frame. So guys, let's get to the charts. So first of all, I always like to show you guys a diagrammatic setup of my system. But before I do, I want to start on the monthly time frame to be able to show you guys some certain concept which I use to predict market. So guys, beginning on the monthly time frame, I just wanted to highlight 1 or 2 points here. Basically, demand and supply zones and price reaction. Based on historical data and based on price movement in the past, we are able to see, for example, at this point, that price always likes to react mostly on supply zones and on demand zones. There's Okay, looking at this picture within this zone, we see clearly that there was 1 reaction, 2 reaction, 3 reaction, 4 reaction here, and 5 reaction. We see that 5 reaction occurred mostly on supply zones and on demand zones. So based on the concept, even when I get into the lower time frame, I'm always expecting price to react within a supply zone and a demand zone. And once price is able to react within a supply zone or a demand zone, I can scale down to a lower time frame to be able to spot selling or buying opportunities. That's the simple concept which I was about to bring in this video. And also, in trying to spot selling or buying opportunities, I have to ensure that there is I have to ensure that there's enough liquidity in the market which I'm trying to target as my take profit. That's all. Now let's get into the diagrammatic representation of my setup once more. So this is my setup. Like always, when each time I get into the market, each time I see a reaction within a higher time frame, be it a sell or a buy, let's go on the direction of a buy. Let's say I'm looking to take a buy. Each time I see a reaction, each time price start selling and coming down, and I start seeing a reaction of price within an area, and I notice that within this area it is a demand zone, I'm expecting price to provide a reaction within that area on a higher time frame, which will be able to push price upwards. And once I see a reaction within that higher time frame, I will scale down to a lower time frame to be able to spot market structure. Once I'm able to see that there's a lot of market structure which has been created, and after that reaction, market structure had been broken or is shifted to the upside, giving me a potential opportunity for a buy, I'll be expecting that price should be able to come down. I'll be expecting that price should be able to come down and consolidate a little bit and create enough liquidity, which I will be targeting. And once price has created a liquidity either on both sides, it can be on this side, it can be on this side, it can be on both sides. Once I am able to spot liquidity, which I'm able to target or expect price now to come into another demand zone which was created based off of based off based on this reaction, and then I will enter my trade here. It's very simple, guys. This is the simplest setup which I use. This is a simple setup which I use every day. First of all, not First of all, I wait for price to drop into a higher time frame demand zone. Then I scale to a lower time frame to see if I could see some small market structure being created to the downside. And based on the reaction formed within the higher time frame demand zone, I will be expecting to see if price is able to break structure above. Once structure is broken down above, and I see that liquidity has also been taken before price decides to react within this demand zone, or if price has taken out liquidity on the left before breaking up structure to the upside, I'll be expecting now to spot liquidity which has been created within this area before I target my entry here. Simple as that. So now let's get into the chart, guys, and let's see exactly what I'm talking about. The exact setup you guys see here is the exact setup which I'll be using to enter my trades, and it's the exact setup which I used to enter this trade which I'm about to show you guys. So presently, this is price. I scale to the weekly time frame and to the daily time frame. I scale also to the 4-hour time frame. Okay, presently, being on the 4-hour time frame, I'm expecting price to fill out this week and to provide a reaction within the zone. Personally, we know from historical price data that price on EURUSD likes to react mostly at times on supply and demand zones. And since this is a supply zone, I'm expecting that price should be able to come here and react. Since I'm already expecting my direction to be a buy, I should be able to look for a buying opportunity. Presently, I see no liquidity below here, so I don't see any reason for price to sell directly. You understand? So that's the point. I scale down to the 1-hour time frame, and within the 1-hour time frame, guys, remember the concept which I told you guys. Price created this demand zone. You understand, guys? Then created Asian low liquidity and Asian high liquidity. That was what I saw when I looked at the charts. Price created this demand zone, created this Asian low liquidity and this Asian high liquidity. Okay, and then before price started dropping, I'm not sure. So since trading is a game of probability, there's also a probability that this demand zone could not be respected. Price might decide to come down within this demand zone. So what do? We don't actually decide to just enter a trade directly. We cannot just enter a trade directly thinking this demand zone will hold. Some people do trade like that, but we need more added confirmations because price might react here and dump and continue to come within this other demand zone before we see a reaction. So since we are not sure, we had now to scale to the 30-minute time frame to be able to spot opportunities if we are unable to see opportunities. Remember, market price did react from this zone. You understand, guys? Since price was able to react from this zone, we are supposed to scale down to a time frame which is lower than the actual time frame until we are able to see a time frame where we'll be able to spot opportunities for a market structure. Presently, I had to scale right down to the 5-minute time frame, and within the 5-minute time frame, guys, we are able to spot some market structure. Price created this high, which created this low, which created this high, which created this lower low, which created this lower high, which created this lower low, which created the lower high, which created the lower low, which created the lower high, which created the lower low. And upon creating this lower low, see something, upon creating this lower low, guys, price swept this Asian low. This Asian low, remember I always told you guys, this is another type of liquidity. In the future, we teach you guys about liquidity concepts and the various types of liquidity. Asian low and Asian high is one type of liquidity. As I always tell you guys, price within the London and New York section will always try to take out the Asian low and the Asian high liquidity. Remember, it does not always succeed all the times, but most of the times, like 80% of the time, on the pair Euro USD, for example, it always take out the Asian low and Asian high. So since the Asian low liquidity was taken, that means liquidity on the left side has been taken, and now we expect price now to react from here. And exactly as price reacted from here, we saw a change of structure. We saw a change of structure to the upside. And since price reacted from here and changed structure to the upside, in the process of changing structure to the upside, it created a 5-minute demand zone. So our expectation is one, we have multiple liquidity here. All this week we see here that liquidity. Remember, is a lower time frame though. So this is a lower time frame liquidity plus the Asian high liquidity, which is above here. This is the Asian high liquidity. So this is the Asian high liquidity, and this is another liquidity. So based on that, we have liquidity created, enough liquidity on the above. You understand, guys? And this is another liquidity. This is another liquidity. So since I think there is enough liquidity above and there is no liquidity below here, there's no direct liquidity below here, I was expecting price to come down into my demand zone and I placed my trade. Price came and tapped into this demand zone, came again and tapped again a second time. But from the first time, we're already into the trade. And since we're already into the trade, our take profit is very simple. We were targeting this level. We're targeting this level of liquidity. This was the extent to which there was liquidity in the market. We were expecting that since the Asian low had been taken, the Asian high should also be taken. And this was the best entry we could have to be able to target this Asian high. And in looking at the chart, if it comes at times, it might come that chart gives that price gives us another retracement for another opportunity. If for some people who were able to miss the trade, and this was another opportunity here, guys. Price came here, broke structure, went to the upside, created another structure to the upside, as you guys can see, to continue the bullish movement before it brought in again another retracement, which came into this liquid this demand zone which it had created. So there was another possibility to enter a buy trade again. And even entering a buy trade here, the most likely place to target again was this liquidity. But I did not take this trade because I'd already taken this trade from the first point. So, but it's just an explanation. At times, the market might give us many opportunities for a re-entry. So this was a simple setup, guys. So stay tuned to my channel. Remember, let me do again a summary. We expect, first of all, what do we expect from a buy setup? Price should react from a demand zone formed on a higher time frame. Here is 1 hour time frame. Secondly, based of the reaction, liquidity on the left hand side, which is, for example, this Asian low liquidity must be taken out. Once it's taken out and there's a reaction, we scale down to a time frame which permits us to be able to spot market structure, and we're able to see market structure on the 5 minute time frame. After we saw market structure and we are sure that there is no more liquidity left on the left side, since all liquidity on the left side must have been taken, I call them direct liquidity. That is liquidity which is directly closer to price. We wait for market to change structure to the upside, giving us a potential possibility for a buy, and now leaving another demand zone formed on the 5 minute time frame. We're expecting price to retrace back to that 5 minute time frame for us to get our entry. And in getting our entry, we're able to ensure there's enough liquidity on the upside, which we are targeting. As we can say, liquidity here, liquidity and liquidity, and that is where we put our take profit. This is the same buy setup. Price broke structure, took out liquidity here, got reacted, broke structure, created liquidity, reacted from that demand zone on our lower time frame, and we target the liquidity. So that's all on the concept, guys. Thanks for watching. The video might be long, but I do my best so that I try to explain on and on. So I show you guys the trades I take with explanation on how my setup works. Maybe in the future, if I get a sell setup, I will do the same thing, guys. So comment, subscribe, and share my video, please. It will be a pleasure for us to stick together. It will be a pleasure for you guys to consistently watch my videos. Thanks. Stay safe and stay blessed.